Recording in progress.
Good afternoon to all the GST enthusiastic who are watching this webinar. Near about 500 plus participants are eagerly watching this webinar. And this webinar series is immensely popular within our IDT practitioners, and all our members of ICI are in line with our initiative of this GST and ITT committee, that is sharing knowledge. Yes, friends, sharing knowledge is key to success in our practice, and ICI is always a front runner. Whenever possible, ICI shares knowledge with our members, and that knowledge is taken into practice by our members. Under the leadership of our chairman, R.K. Sir, Rajendra Kumar Sir, in his absentia, we are taking this committee to the greater heights. We thank our chairman for his visionary leadership. Friends, now coming back to the topic for today's webinar is invoicing and ITC risk. So these both things goes hand to hand. A supplier issues the invoice, a purchaser receives the invoice, and ITC also get transferred. Means what? Supplier pays the tax and ITC get is received by the recipient. But we all know there are section 16, 17 rules and many much circulars and court judgments and whatnot on ITC. And to deal with this, we have our able speaker, Manoj Garg, who is a very intelligent chartered accountant from our fraternity, and he is practicing in IDT committee, worked with many of big four firms earlier, and now full-fledged in GST practice. So welcome you, Manojji, and we are happy to host you as a speaker today. And with you, today we have another co-speaker, that is Aditya Agrawalji. So both are going to deliver on the same topic. They will interchange themselves. And friends, Aditya Agrawal ji is one of the prominent chartered accountant who is practicing in GST. He is also having a very good exposure of GST with big fours in the past, and also leading in various social media newspapers on different topic related to GST. So we have two batsmen. They will be interplaying on this GST pitch, and I hope all our audience who are watching this match will enjoy this match, because matching and mismatching of invoice is also one of the key. So I thank all the participants and our tech team and our GST and IDT committee in Preet and all others for organizing this webinar on weekly basis. So I will request Manojji to take forward the session, and thereafter, whenever possible, Aditya will rope in. Over to you, Manojji.
Thank you, Mr. Thank you very much. At the outset, I would like to thank GST and IDD committee for introducing me to this hotsome issue, I would say. Um, Again, a lot of matters related to uh, input tax credit. इनपुट टैक्स क्रेडिट एक ऐसा इशू है कि जो कि कितना ही सुन लो कोई ना कोई नया इशू फिर भी क्रॉप अप हो जाता है और हर लिसनर इस इशू के बारे में डिस्कस करना चाहता है सो फॉर दैट आई विल स्टार्ट बाय शेयरिंग माय स्क्रीन फर्स्ट आई होप माय स्क्रीन इज विजिबल टू ऑल ऑफ यू So, before starting with the topic, I just want to brief you about basic provisions. I hope जो भी हमारे लिसनर हैं अभी इस टाइम पे वो सब ये चीज को अंडरस्टैंड कर पाएंगे कि एग्जैक्टली व्हाट आर द प्रोविजंस विच आर बीइंग अवेलेबल under GST with respect to invoicing and with respect to input tax credit. We will discuss it later on how the issues are cropping up under GST audit. But primarily, I would like to discuss first with the basic provisions as far as input tax credit is concerned. So we all know Section 16(1), which deals with the eligibility or entitlement of input tax credit, which states that uh, ITC shall be entitled with respect to any supply of goods or services or both which are used or intended to be used in the course or furtherance of business, and that the same has been credited in the electronic credit ledger. Subsection 2, which talks about the conditions of the ITC, which states that there are typically 6 conditions, which they're talking about, primarily 5 conditions, which states that there has to be a tax invoice, there has to be a debit note, which has been issued by the registered supplier, or any tax paying document, so to say. And there has to be, the same has to be reflected under GSTR 2B. The recipient has received the goods or services, the respective tax has been paid to the government by the supplier, and the return has been filed by the recipient under Section 39. This is the basic structure of ITC I'm just talking about. What all are the documents based on which ITC can be claimed is discussed in Rule 36. See, again, why I'm discussing the provisions, because it will help us later on in discussing the case studies, which is later in the part of the PPT. So Rule 36, which states that ITC, there should be a tax invoice based on which you can claim the credit, or or a self invoice. So what is a self invoice? That is an invoice which is being generated by the recipient on himself on account of services or goods received which are covered under reverse charge under Section 9(3) or 9(4), so to say. And the issuance of such self invoice is being stated under Section 31(3)(f). You can claim the credit through debit note or bill of entry or ISD invoice in the typical case wherever it is applicable. Now, these are certain discussions with respect to why an invoice is necessary. Again, it treats as a proof of purchase which is being done from a particular supplier. It is a legal requirement, as we have discussed right now, Section 16(2), which specifies that there has to be a possession of tax invoice or any kind of a tax paying document. It highlights as a key detail for verification. So whenever you're going for a GST audit, if any question comes with respect to any purchase being made, tax invoice will help you in that. It prevents fraud, considering the fact that if the invoice is coming under 2B, you have a typical invoice, tax invoice, uh, valid tax invoice, and the taxes having paid, it will help you determine the eligibility of credit, and it defines the audit trail as well. So this was a basic discussion on ITC. Now I would like to take you upon the type of invoices that can be issued across varied type of transactions. The type of invoice is defined under Section 31 of CGST Act, which states that if a supply is that you can just check onto your screens as well, which states that a tax invoice is issued in case of any taxable supply. In case if there is a ISD distribution being done by an input service distributor, then an ISD invoice has to be issued. In case of an exempt supply, there has to be bill of supply. In case of any person who has opted for, any supplier who has opted for a composition scheme, he has to issue a bill of supply. And then few more there, if there is any kind of a amendment in the transaction, in a change in any transaction value, so to say, then you can issue a debit or credit note. Advance receipt, you have a receipt voucher. And for any I'm just discussing the typical documents which are to be issued on a specified transaction. So if there is any transaction through job work or stock transfer, or maybe any other, not in stock transfer, I'm sorry to say that, no, or any other transaction other than by way of supply, we have delivery challan. And then last but not the least, we have a self invoice, which I just discussed, that it has to be issued when there is a transaction is covered under reverse charge mechanism. Now, to start with, I have my first case study, which typically we find in few cases that the issue in the given case study is that there is a contract of ABC Limited with the just for the sake of convenience, I've taken the recipient name as ABC Limited. So the ABC Limited has purchased the goods from a supplier which are to be delivered to ABC Limited in batches over a period of time. So just to give you a reference, that the contract was entered in March, say 5th of March, in which the first consignment was to be delivered on say 20th of March, and later on was to be delivered in four installments, which was the last installment being to be delivered on 5th of December. So now the question here is with regard to whether the ITC of the invoice which was issued with respect to the transaction can be claimed in 23-24, or it has to be claimed later on. Why I'm discussing the issue of ITC in this regard? Because the provisions are such which are not very clear, and which are not very clear for the recipient to clarify on the availment of ITC. So just to start with, what does the provision state as far as ITC is concerned? Section 16(2) states that a person, a recipient, has to have a tax invoice in his possession given by a registered supplier or such other documents as we have discussed. But with respect to goods received in lot, the registered person or the registered recipient is entitled to take the credit upon the receipt of the last installment. Why it is important? Because we have to read corresponding to rule 55, which states that the goods being transported, they have laid down the procedure for transporting the goods if they are being transported in batches. So what rule 55 has to say? It states that the supplier has to issue a complete invoice before the dispatch of first consignment. So in our case, the invoice has to be issued, say in our case it was 20th of March, so it has to be issued before 20th of March or before 20th of March. Then the subsequent movement of goods has to be done through a delivery challan corresponding the reference of that particular invoice, and the original invoice shall be sent on the last consignment. So what do we have a question here? The question here prescribed is whether, since the invoice was issued before 20th of March, then whether we are eligible to claim the ITC as per section 16(4), which bars lays down the time period for claiming the ITC. So for ABC Limited, invoice was issued for 20th of March. 16(4) says that you can claim until 30th of November, whereas our last installment was received on 5th of December, which is after the time barring period. Then in what will ABC Limited do? Because he is eligible to take the credit after 5th of December only. In that scenario, this is a catch 22 situation for ABC Limited. In that scenario, it is better to claim that ITC, reverse that ITC in 3B, and then reclaim the ITC post 23-24, or so to say in the December GSTR 3B. Reason being, to my humble submission, the time barring limit is not applicable for reclaiming of credit. So in this scenario, ABC, let me reiterate my point, ABC Limited can claim the credit which is coming under GSTR 2B in the month of March. It has to reverse the same credit and then reclaim it in the December return, as discussed in the case. I hope we are clear with the case study right now. We have now I'll move on to the second case study, which in this So in this case study, we have a recipient named Piyush who is registered in UP and Rajasthan. And he has a supplier Pavan who is registered under Madhya Pradesh. And he has been receiving the goods in Uttar Pradesh and Rajasthan. In both the states he is receiving from the Pavan. Now, in one instance, what happened is that he received the goods were intended or were actually delivered to Uttar Pradesh office. However, a wrong GST number was mentioned by Pavan while in his invoice, which was Piyush's Rajasthan GSTIN. In other words, he sent the goods to UP, but while issuing the invoice, he mistakenly mentioned the GST number of Rajasthan of the same recipient. So now in this case, whether Piyush is eligible to take the credit in Uttar Pradesh or not is a question. Reason being, the ITC would be coming under 2B of Rajasthan, and goods are actually being delivered in Uttar Pradesh. So as far as 16.2 is concerned, both the units GST numbers are technically ineligible to take the credit. Reason being, the goods are not delivered in Rajasthan, so they are unable to take the credit as per 16.2. And since goods have been delivered in Uttar Pradesh, but since they do not have the proper invoice, they are unable to take the credit as far as the provisions are stating right now. Now, in this regard, we have a very beautiful judgment of Delhi High Court, B. Brown Medical India Private Limited versus Union of India, which has typically catered the same issue, wherein the company B. Brown was a recipient and took medical equipments from Elcon Parenterals. In that scenario, Alcon mistakenly mentioned the Bombay address, whereas it has to mention the Delhi GST number. And since Delhi GST has claimed the ITC, department stated that you have to reverse the ITC since you are ineligible to take the credit. See, in such scenarios, sometimes we see, I feel that judiciary play a crucial role, that even if the law does not correspond to the actual transaction, still with the help of judiciary, we can get the relief for what mistaken mistakes have been done during the course of transaction. So in this scenario also, what Delhi High Court stated, that it was merely a small error which is being done by the supplier, and the petitioner, in our case which was the recipient B. Brown, should not be lapsed with the substantial loss which has caused due to such small error. So in this, and moreover, the case also stated one more point, that that the ITC was not being claimed by the Bombay office per se. So it is important to understand one point, that if the ITC is not claimed by the respective offices, and it pertains to a specific GSTN to whom the actual goods have been delivered, this small error can bypass and help you take the credit as far as B. Brown is concerned. So to add on to this case law, I have few more points to discuss, that if during the course of audit, suppose you have a similar case, you face that the supplier has mentioned a wrong GST number, and you have validly taken the credit since it pertains to a particular GST number, you have an option to provide substantial proof to provide the genuineness of the transaction. Just like if you have the movement of goods coming out to your warehouse or to your office, if you clarify that the proper tax has been paid by the supplier, it is merely an error on account of the supplier mentioning a wrong GSTN of on the invoice, cannot tantamount your ineligibility of ITC if you substantially prove the genuineness of this ITC against a wrong invoice. So I hope I'm not going very fast. If I My next case study I want to discuss, it is a small case study, but yeah, it is a relevant case study to discuss right now. That in this one, that company, the Harsh and company issued a debit note in favor of Nirvan Industries in July 2021 against the transaction which occurred in original invoice in March 21. So now question that arises here is whether the time limit for claiming the ITC with respect to this debit note would be financial year 21-22 or would it be 2021? Can anyone tell me please? Is the ITC with respect to debit notes issued is eligible to be claimed until 21-22 or should it be for 2021 only, that is 30th of November 2021, or it can you can claim until 30th of November 22. So recently what a circular has been issued in this regard which typically covers this situation because the earlier representations have been followed from the industry itself. Because in earlier provision, it was stated that the invoice, that the credit, input tax credit with respect to invoice or debit note for a supply of goods or both shall be claimed until 30th of November following the end of financial year to which such invoice or such invoice relating to the debit note pertains. Earlier, it was before 1st of January 2021. So, in that scenario, what issue used to come that since invoice pertains to 16th March, then even if the debit note is issued in the next financial year, you can claim the ITC with respect to that debit note till 30th of November following the end of the financial year, which in your case is 2021. That is, you can claim the ITC until November 21. However, later on after 1st of January 2021, a law amended and a corresponding circular was also issued, which clarified the same issue and stated that the time limit for invoice and debit note shall be computed separately. So, in our case, if debit note has been issued in next financial year for the invoice which was previously issued in previous financial year, then ITC against the debit note shall be availed the until 30th of November following the financial year in which the debit note was issued. I hope I am clear in this. So in the present case, as the debit note was issued on 7th of July 2021, ITC of the said debit note can be claimed until 30th of November 2022. I hope I am clear with this case study. It was small, but yeah, point to be discussed. Now, this case study is a pretty interesting case study wherein it was seen that the supplier has not paid the taxes to the government against the transactions given to the recipient, and the recipient has paid the tax to the supplier. He has a valid tax invoice and he has received the goods. So all the conditions of 16(2) per se are being satisfied except non-payment of tax by the supplier. But whether due to that reason can the ITC be barred to the recipient, considering that fact in the present situation we have taken recipient as JKG Private Limited, wherein it used to procure goods from XYZ traders. It was at the time of audit, it was seen that XYZ trader has not filed his GST return. So they department asked JKG Pyramid Limited to reverse its ITC, which has claimed against such supplies. So, the moot question here is whether they are actually eligible to claim such ITC or not. We have just discussed the provisions in which one of the important provision is that tax has to be paid by the government. Since tax is not received by the government, still can the recipient avail an ITC or not? Again, we have to check in this. For this, I want to rely on a case, recent case, which came on 30th of May 2025, RT Infotech versus Additional Commissioner, wherein the department asked the petitioner here, RT Infotech, to reverse the ITC claimed against the invoices issued by Bharti Airtel, and it was found that RT Infotech had actually made the payment to the supplier, and but the supplier hadn't paid the tax to the government. Considering the fact that even if the tax has not been paid, what the judgment quoted was that even if the tax has not been paid to the government, it was the duty of the department to first claim said tax from the supplier. It was the duty of the department to claim such tax from the supplier, or the relevant proceedings has to be initiated for claiming such tax from the supplier. You cannot abruptly ask the recipient to reverse the tax, even if, wherein if you are proceeding certain proceedings for non-payments against the supplier, which the case specifically mentioned. The case had clearly helped the recipient in claiming the ITC, and also quoted certain judgments, that was DY Beethel and Suncraft, and both of those judgments were also in favor of the SSE, which helped the SSE in claiming the ITC even if there is non-payment of tax by the supplier. So I hope this is one more judgment of Allahabad High Court. That is help adding in the SSE's kitty, wherein the SSE can take the reliance of the judgment and claim the ITC, just being bona fide, and considering the fact that since there is no control over the supplier, that with respect to filing of return or payment of taxes, so these points can help any SSE to claim the credit. So I hope I am clear with the judgment. I am taking down with the next issue. The issue pertains to wrongly availment of ITC, which was identified at the time of GST audit, that the recipient, while filing his GSTR 3B, claimed a wrong ITC, that is, ITC was of pertains to IGST, but it claimed in CGST SGST. This is a very common issue we generally find at the time of cases wherein the recipient generally claims an ITC, a wrong ITC of ITC under wrong head, so to say. ITC of claiming of IGST being claimed under CGST SGST is a very common issue. So in this scenario, what department said that you have to reverse the said ITC claimed under CGST and SGST. So how valid is this wrong, whether it has to be categorized as a wrong availment or not is a question in itself. And whether this ITC, which is being mistakenly taken as a CGST SGST and not IGST, should be reversed or not is a question. So in this given case study, I have taken ABC Limited as a recipient, who has mistakenly, while filing his GSTR 3B, and mistakenly taken the credit as CGST SGST and not IGST. The transaction was an interstate transaction. So, just at the outset, I want to just discuss the relevant provisions before discussing the relevant case law which has helped the SSE in claiming that credit. So, we all know Section 49(5), which discusses about the order of credit to be claimed, wherein it is stated that IGST can be claimed first with IGST, then with CGST, SGST, or SGST. Then central tax can be claimed with CGST and IGST, and same goes with SGST and IGST. Only difference here is that you cannot claim the tax credit of CGST with SGST or SGST with CGST, including UTGST. So now, in the present case, this inadvertent error of claiming GSTR of CGST and SGST would actually lead to a revenue loss. That's a moot question we have to check. We have a relevant case law in this regard, which is Rajimon Padika, sorry for my pronunciation, of Kerala High Court, which has clearly taken this issue into consideration, wherein the case was that the petitioner had again purchased certain goods from had a interstate supply wherein IGST was there in GST at 2B, but mistakenly while filing his return, the ITC was claimed as CGST, SGST equally. So department asked the petitioner to reverse the credit. What petitioner had to say? Petitioner had to say in this regard that in the given situation, the entire amount of electronic credit ledger is a would be considered as a revenue neutral situation, considering the fact that even if it has been taken, even if there is no difference in the ITC amount, there is no excess ITC being claimed by the petitioner. That's what petitioner had to say. Furthermore, just I'll take a point on this. Furthermore, the case also discussed one more point, which stated that using referring the circular 192 oblique 4 oblique 2023, which takes down the issue of interest with respect to charging with wrong availment of IGST credit and reversal thereon. There was this circular stated with respect to interest. The circular clarified that whatever ITC is being claimed, that whether it is CGST, SGST, or IGST, you have to consider it as a pool of ITC. If any ITC which is being claimed over and above this pool shall be subject to interest, and no interest shall be levied if there is no such let me reiterate the entire the specific point of that circular, which state that since the amount of ITC available in electronic credit ledger under any heads of IGST, CGST, SGST can be utilized for payment of liability of IGST. It is the total input tax credit available in electronic credit ledger under the head IGST, CGST, SGST taken together that has to be considered for calculation of interest under Rule 88B of CGST rules. And for determining as to whether the balance credit ledger has fallen below the amount of wrongly availed input tax credit of IGST, and to what extent the balance of electronic ledger has fallen below the said amount of wrongly availed credit. Thus, in the cases where IGST credit has been wrongly availed and subsequently reversed on certain date, there will be no interest liability on such reversal, and balance input tax credit of electronic credit ledger under the heads IGST, CGST, SGST taken together have never fallen below the amount of wrongly availed ITC, even if available balance of IGST credit ledger falls below the amount of wrongly availed IGST. So just a small snippet of this point, that even if a particular credit ledger goes below the actual ITC claimed, it cannot be interest cannot be leveled, as we have to see it holistically. That is what the case law is also referred to. The case law also took on treating this as a unified source, stated that even if CGST SGST has been claimed against and not the IGST, you need not to reverse the ITC, as this is a revenue neutral situation, but subject to one condition. In the given present case, we have to understand one point, that the outward supply was of CGST SGST. There was no IDST in the given case. So considering these aspects, one may take a view that yes, they can still claim that which has been inadvertently taken as wrong credit, you need not to reverse ITC. So whether this inadvertent error would actually be considered as a wrong availment of credit then, for the purpose of issuance of any kind of notice, be it for assessments also, that is one more question to be seen. So after this judgment, to my mind, this should not be treated as wrong availment of credit until unless there is a revenue neutral situation. You have not claimed an excess credit. The only point which we can cover under the scope of wrong availment of credit would be that if the ITC is overclaimed, or where it is being wrong, the order of claiming of ITC, that is 49.5, is being hampered, that you have not claimed the ITC as per the order prescribed under section 49.5. So I hope I'm clear with this judgment. So there is one more case study I want to discuss. It is with respect to OIDAR services. It is a small case study though, but a point to be taken. Whether it is a part of GST audit or not is a separate question, but it is still an issue. In the given case, the company was registered in Rajasthan and was providing online information and database access retrieval services. Just to give you a perspective, like any kind of, they were providing a online bookstore to the person so that he can read the books, e-book, so to say. And the recipient, who was an unregistered individual located in Delhi, availed those services. He made the payment. In that regard, what ABC Limited, in the given case, what ABC Limited did, since he was not having the address of Delhi, they issued the invoice stating place of supply as Rajasthan and paid CGST and GST. So now the question here is, actual consumption is being done in Delhi. GST is a consumption based tax. So whether the flow of revenue to Rajasthan state, stating that the place of supply is Rajasthan, is justified due to absence of address of the recipient. Section 12 lays down the conditions for place of supply of services, where the location of supplier is in India and recipient is also in India. The general provision states that the place of supply of services with respect to services being made to a registered person shall be considered as a location of such person. Whereas if the service is being given to an unregistered person, and if you have the address on record of that particular recipient, then the location shall be treated on to that then the place of supply shall be the location of that recipient, or otherwise if there is no such address available with you, the location of supplier shall be treated as a place of supply. So in the given case, since address was not available with the supplier, is he justified in mentioning his place of supply as Rajasthan and pay CGST, HGST? So in this regard, there has been an amendment being made under Rule 46F, which clearly mentions that the in case of OIDA services being given to the recipient who is unregistered, irrespective of the value of supply, the tax invoice issued by the registered recipient shall contain the name of the state of the recipient, and the same shall be deemed to be the address on record of the recipient. So this amendment came into effect from 4th of August 2023, wherein it was made mandatory that while issuing the tax invoice, the same point has been also discussed in circular as well, which came on 31st of December 2024. So before getting onto that circular, I'm just stating that the provision has clearly stated that for the purpose of determining correct determination of taxes with respect to OIDAR services, it is important that you mention the state of the recipient so that the tax can be shifted to the concerned state. Whether so, in the given case, rel, the said mechanism has been duly being confirmed or clarified via circular 2042 oblique 36 2024, wherein it was clearly stated that the supplier has to devise such mechanisms to capture the information of the state. So in the given case, if the recipient, if the state is mentioned, if available, if the state is available with the supplier, he has to get that information from the recipient. He has to devise such mechanism on the portal, while wherein while signing in the SESI, the recipient has to mention its state. Based on that, that particular state will be irrespective of the fact that whole address is not available with the supplier. Based on that particular state, the supplier can determine the place of supply and charge respective taxes accordingly. So this is with this, I finished my case study 6. But there is one more case study I want to discuss again. This is with respect to reverse charge mechanism, wherein advocate services were taken by ABC Limited, but two scenarios we have discussed in this, wherein self invoice was issued by ABC Limited on 1st of October, and in second case, the ABC Limited issued on 2nd of December. Why we have taken these two dates? Because in this given case, Rule 47A becomes prominent. What will happen to those cases which are being done post 47A, and the cases which are pre 47A? So in the given case, we are considering that if on 1st of October 2024, the invoice has been issued, because it is important for a recipient to claim the credit based on the issuance of such self invoice only. This is why, because again, we have to cumulatively read all the provisions. Section 31(3)(f), section 16(4), section 16(2)(a), and and rule 36(1)(b). So what does 31(3)(f) state? That if you have taken any services which are liable to tax under 9(3) or 9(4), the recipient has to issue an invoice in respect to such goods or services received from the supplier on the date of receipt of services. So, is there any clarification or any information which we can state what do you mean by receipt of services? Date to determine the date for receipt of services. Is there any such clarification? Prior to 47A, to my mind, there is no such information being provided that for the purpose of determining the receipt of services on the date on which the person has received the services. However, prior to 47A, there was a time of supply which stated that as and when with respect to tax to be paid or liable to be paid under reverse charge basis, wherein it was clarified that the date of payment entered in the books of accounts of of the recipient, or the date on which the payment is debited into bank, whichever is earlier, or where the invoice has been issued by the supplier, it should the time supply shall be 60 days from the date of issuance of such invoice. I'm talking with respect to pre 47A rule now, right now. Clause 6 was inserted along with 47A. So prior to 47A, there was prior to 1st November 2024, this clause was not there. So only two clauses were there, and there was a proviso which stated that if A and B are not, if you are unable to determine A and B time of supply, then you should take it as a date of entry in the books of accounts. So this provision only talks about determining the point of tax as to when the tax under reverse charge has to be paid. It has nothing to do with the receipt of services for the purpose of issuance of self invoicing. So, and more or less with regard to section 16(2)(a), which stated that no registered person shall be entitled to take credit of input tax credit in respect of supply of goods or services or both, unless he is in a possession of a tax invoice or debit note or such other tax paying document as may be prescribed. So, and read with Rule 36 1B, which stated that 31(3)(f) invoice issued in the 31(3)(f) shall be considered as a valid document for claiming the input tax credit. So all these information culminated together. Moot question here would be whether I have paid the tax or not is a separate question. In the given scenario, if I have not issued a self invoice, whether still I will be eligible to take the credit of that particular amount which I have, whether I have paid or not. If I'm right now paying the tax under reverse charge with respect to our previous services, I have to pay that tax. I am clear I am paying that tax. I'll pay that tax with interest. But whether I will be eligible to take that credit of that particular tax or not would come into picture. So considering all these scenario, all these information, all this provision, to my humble submission, it is clear. It is clear that you can raise a self invoice right now, claim that credit, pay that tax, raise a self invoice, and based on that self invoice, you take the credit. There is no challenge to that particular process with regard to self invoicing. Now, what will happen post 47A? The only difference is that earlier there was a no time limit prescribed for issuance of such invoice. Now they have issued a time limit to issue a tax invoice, a self invoice under 47A. If you have not followed that particular rule, the only difference would be that there will be additional penal consequences that will be levied on you on non-compliance of Rule 47A. However, to my submission, I don't feel that there would be any difference per se, even if you file late, if you later on issue a tax invoice, you can still claim an ITC under section 16. There will be no challenge. Even if you, the only difference would be that you have to pay the interest if you are later on paying the tax, and pay the penalty with respect to such non-issuance of self invoice. So I hope I'm clear with this issue. So these were few case studies which I had to discuss, which were actually being followed at the time of audits. So if there, we have few questions which I've received. Let me open the chat box first. So there was one question from Maruti sir from Hyderabad. I hope I've justified with the question which you had asked with regard to my through my last case study. The question was the same whether RCM under 21 RCM of finance financial year 21-22 paid in financial year 25-26 due to audit notice received in 24-25. Can I claim the credit of ITC after payment? I hope I have covered this question. So, so one more question I'll take. There is one question. What is the legal evidence under Act to justify the movement of goods? Sir, there is no specific provision or specific rule which justifies, which lays down the prescribed procedure or documents per se to define the movement of goods. However, as we all know, Rule 138 states that whenever there is a movement of goods, you have to issue a e-way bill. You have to take the help of certain judicial pronouncements in this in order to justify the movement of goods. Just to give you a reference, we have one case study, one case law in Ecom Gill Coffee Trading Private Limited. So, wherein the court had laid down, Apex Court had laid down the documents per se, that what all documents can be used in order to substantiate the movement. They have not given any kind of exhaustive list, but yes, just to give you a perspective that what all can be the documents with which you can substantiate your point to substantiate your point for movement of goods per se. So yeah, there is no specific legal law or legal act which clearly defines the documents. But yes, you can take the help of judicial pronouncement. Just I referred one. So one more question. In case if an SSE purchased the goods from supplier during the time of GST audit, we came to know that the name of the supplier has been reported as non-genuine SSE. In this case, officer can disallow the ITC credit with, sir, in this is the same scenario wherein, sir, you have to justify. See, ITC is a, sir, vested right. What do you mean by vested right? That if you have fulfilled all the condition prescribed against that claiming of that benefit, then only you can vest, then only it will convert into a right per se. So for claiming ITC, there are certain conditions prescribed under 16.2. So if you have fulfilled all those conditions, then you are eligible to claim that credit irrespective of the fact whether the supplier is non-genuine, whether the supplier registration is cancelled, or any sort of reason which a department is questioning. So in the present, in your case also, if the supplier, even if the supplier is non-genuine as per departmental records, but you are able to substantiate through documentary proofs that my transaction is genuine, then ITC is duly eligible to you. So I hope these are few questions that came in. So I have tried to justify my position and tried to clarify as many as questions possible. So I would now would like to hand over the stage to my friend as well as my co-speaker Aditya Agarwal, who will take you deep dive into the nuances of GST audit. So yeah.
Uh, Thank you, Manoj. Uh, First of all, respected dignitaries from ICI, Chairman of IDTC, C. Rajendra Kumar Sir, Vice Chairman C. Umesh Sharma ji in absentia, who just started the session with a welcome note, my fellow speaker C. Manoj, and all the esteemed members who have joined us today. Good evening to all. First of all, it's an honor to be part of this platform under the leadership of GST and Indirect Tax Committee of ICI. I am being nominated third time in this committee, know how difficult it is to organize these kind of webinars and seminars in the committee. So I would also like to congratulate Smita ma'am, the secretary, and Impreet for coordinating this webinar. So today's topic is invoicing and ITC risk in the GST audit. So it is not just a compliance concern, but a growing area in light of increasing departmental audits and database scrutiny. We are witnessing a clear shift of audits that are no longer limited to books, but they now deep dive into invoice legitimacy, vendor compliance, and ITC eligibility. That is all AI driven. We can see how the authorities are red flagging the taxpayers on the basis of their DGRM softwares, which are totally automated and AI driven. Most of the task is now AI driven, and this is a fact that Indian government is now focusing more on AI driven tools to catch the fraudsters, and we are seeing all these fraudster and news coming in the newspapers. So incorrect invoicing, poor vendor hygiene, ITC misreportings. As a professional, it is critical that we move from a reactive to a proactive audit mindset. So Manoj has taken various important case studies that are practical, that are based on the practical scenarios and practical notices that are being issued by the GST authorities. So I'll be sharing the practical experience from the departmental audits that we have done and the key risk zone so that it can be mitigated, right? So let me share my screen. Right. So now we'll be discussing more about departmental audit. What are the legal provisions of the departmental audit? And in the second part, I'll be taking all the practical aspects that are being questioned in the departmental audit, right? So now we have to understand that there are two types of audit. First is the departmental audit conducted under Section 65, right? And the second is the special audit that is conducted under Section 66. So right now we will be discussing the department audit under section 65. First of all, this is a quick recap that what is an audit. So audit includes basically 5 aspects. First is the correctness of the turnover declared. The output tax has been properly discharged. Refund and the input tax credit availment and the compliance. Now, if you see the definition of audit, it says registered person under this act. So, what inference we can draw from the word registered person? That a departmental audit can be conducted of a registered person only. If a person is eligible of, if a person is supposed to get himself registered under section 22 of the GST Act, but he has not taken the registration, the audit cannot be conducted and audit notice cannot be given to that assessee, right? Now, we will directly jump to the sections along with the rules, and then I'll start with the practical case studies connecting the ITC with the audit, right? So, section 65, subsection 1. First of all, we have to see what is the starting section, that is 65 subsection 1 along with rule 101 sub rule 1. So the period of audit to be conducted under subsection 1 of 65 shall be a financial year or parts thereof or multiple thereof. So we can see that if the taxpayer has received an ADT 01, we'll discuss in the next slide. If an audit notice is issued, it can be for a particular financial year, say 22-23, 23-24, or a part thereof. We can say for the first year, July 17-18, it was from July 17 to March 18, right? Or it can be for say 4 years, from 17-18 to 23-24, right? What is the scope of verification? That is defined in Rule 101 sub Rule 3. Now, important section, an important query that is being asked by various taxpayers and professionals. Section 65 subsection 2. If a person has received an audit notice, whether that audit will be conducted at the place of business of the assessee or in the office of the audit commissionerate. So this option is totally depending on the mercy of the authorized officer. So the GST audit officer will decide considering the volume of the data, right, and other factors that he will audit at the place of the taxpayer or at his office, right? So it is totally at his discretion that where he wants to get the audit of the taxpayer done, right? Now, this is the ADT 01 format that if a person has received an audit, a notice for conducting an audit, a specific format is already issued by the department, and the form number is GST ADT 01, right? So it will be issued under section 65 subsection 3, which says that a registered person shall be informed by way of notice under ADT 01 not less than 15 working days prior to the conduct of audit. So you will get a 15 days time, right? And for an audit notice being issued to the taxpayer. Now, DIN was mandatory, as we know, in all the communication, DIN was mandatory. But on 9th June 2025, quoting of DIN was made not mandatory in case the communication has verifiable reference number, right? If we have RFN on the document, then DIN is quoting of DIN on the document is not mandatory, right? So to give a practical aspects to the presentation and my deliberation, I have incorporated an actual notice by eliminating all the relevant details. So this is how an ADT01 notice looks like, right? There is a predefined format, and in almost all the audit commissionerate, there is a standard list of documents for which is being asked by the uh, audit officer from the taxpayer, right? It is an irony that the data they most of the data that are asked by the officer is available on the GST portal, but but again the data is being asked by the audit officer from the taxpayer, due to which there is duplicacy of work. But again, this is how it works. Now, section 65 subsection 4, it deals with the completion of the audit, right? When the audit is commenced under section 65(1), then it has to be completed within 3 months from the date of start of commencement of audit, which can be extended by further 6 months by the approval of the commissioner, right? Section 65 subsection 5, right? During the course of audit, the authorized officer may require the registered person to verify the books of accounts, right, for timely completion of audit. Now, this rule 1014 is very important. I had received so many queries and clarifications from the taxpayers, from business units, and from professionals, that if what will be the scenario if we have received the audit notice, we have given all the data, we are cooperating with the audit authorities, commissionerate, everything, but they are finalizing the audit without considering our replies. What we as a taxpayer can do? So this rule becomes very important. It is clearly stated in the law that the proper officer shall finalize the findings of the audit after due consideration of the reply furnished. So it cannot happen that an audit notice is issued, he has not given you any personal hearings, no chance to reply to the audit queries. That cannot be possible, right? He has to give you the audit memo, the audit queries. He will ask you what are your comments, then you have to reply on the comments. It will be a part of the audit proceedings. The audit memo is the part of the documentation of the audit procedure. So this is again a practical document, right? So this kind of audit memo will be issued by the audit authority to the taxpayer, to the auditee, that these are my queries and I want a detailed reply on these queries. If he will be satisfied, he will drop that particular para, that particular point. Else, he will incorporate the unjustified point or the non-satisfactory point and will proceed with the next stage for recovery or for the final issue of ADT02 report, right? Now, on the conclusion of audit, the proper officer shall within 30 days inform the registered person who records are audited about the findings and the reasons of such findings, right? So this ADT02 is the final order. So this final order is being issued by the audit commissionerate, which is duly approved in their MCM meeting, which generally happens in on a monthly basis, right? After the ADT02 is issued, this is the final order. right? The next step will happen if there is any unpaid demand or unrealized amount, right? That the taxpayer has not paid during the audit. For that process, a show cause under section 73 or 74, as the case may be, will be issued, right? Now, after the audit has been concluded, then as per section 65 subsection 7, where the audit is conducted under subsection 1 and results in deduction of tax not paid or short paid or erroneously refunded, or input tax credit is wrongly availed or utilized, the proper officer may initiate action under section 73 or 74 that we have already discussed just right now. So the next step is recovery, and the recovery is possible after issuing of notice. So now what is important? What is important is that who is the proper officer here? Whether he is the audit officer or your jurisdictional officer. My friends, you have to take a note. As per section 65 subsection 7, the initiation of notice that has to be issued under section 73 or 74 for the recovery will be given by the audit officer, but the adjudication of the show cause will happen at your jurisdiction office, right? We'll see later in the presentation. So what is the crux? After the conclusion of audit, the show cause will be given by the audit officer for further adjudication at the jurisdictional office, right? Now, section 73 and 74, 73 deals with cases other than fraud, and 74 deals with cases demand a recovery for the reason of fraud or any willful misstatement, right? So for both the section, there is a different timeline, right? We'll discuss right now. But what is important is that if an ADT02, the final audit order has been issued, say suppose to the taxpayer ABC, and there was say 5 lakh of rupees that was disputed and the amount was not paid, right? But the section 73 or 74 notice was not issued by the department. So it is clearly defined by various case laws and judgments that for recovery of any tax interest penalty, issuance of show cause notice under 73 or 74 is must. The recovery cannot automatically be initiated on the basis of AD202, right? Now, this is a show cause demand notice looks like, right? So it is issued by the audit authority, but again, if you see the 10th point, it says that the proceedings of adjudication will happen at the jurisdictional officer. So adjudication from show cause will, or from audit to show cause will happen from jurisdictional office, right? Now comes the limitation period. So there are few queries that roams around me that by what time we can receive a departmental audit notice. See, there is no specific provision related to limitation or due date by which a notice can be issued for the departmental audit, right? There is no separate section or separate notice defined in the law. So 73 and 74, that comes the base which is relevant. So if suppose you have received ADT 01 and the financial year for which the audit has to be conducted is say 1718 to 2021, or from 1718 to 2122. By analyzing this table, you can see that for section 73 and 74, right? So what is the deadline? What is the deadline? For any notice under 73, 2 years and 9 months from the due date, right? Due date of filing of annual return, which was extended and which was further extended by the department for the first 3 years, right? And for 74, this is the date. This is 4 years and 6 months from the due date of filing of annual return. So now what becomes important? If you have received an audit notice for the period 1718 to 2021, suppose if the audit gets started, the audit officer is asking for the documents, the taxpayer is sharing the documents, he he issues an audit memo, the reply is given, right? And the final AD202 is issued. Now, what is relevant is how the recovery will happen. If many cases we have observed, due to limitation period, the audit commissionerate is issuing show cause under section 74 because they cannot issue notice under section 73 because it is already time barred. So if you have received the notice today, the recovery can only possible under section 74 for the period 1718 to 2021, right? So what becomes important? Any recovery, the audit or the department cannot simply give a 74 notice instead of notice under 73 in order to save the time. 74 clearly says that if there is a matter of fraud, willful misstatement, or suppression of facts, only in that case a proceeding under section 74 can happen. But in our present case that we have discussed, if an officer simply says that we will be issuing notice under 74, we can simply challenge that notice, that adjudication at the adjudicating authority. We all know that GSTAT is about to get operational within 1 to 2 years. So I hope so. There are various favorable judgment in service tax, excise, and VAT. When due to limitation of time, fraud notices, when fraud notices are issued under 74, they get dropped at the later stage. So what was the total idea of discussion for the limitation period was that you get an idea. If you have received the notice, you have to first check whether the notice is issued within the timelines first. If it is issued within the timelines, in which section it is issued, under 73 or 74. Third, if it is issued under 74, has the department have that criteria, that documents you can ask from the department on what basis you are saying that this recovery is due to 74, due to fraud, right? So you get a base of your case that you will be able to fight at the later stage at appeals, at the commissioner appeals, or at the GSTAT, or even High Court or Supreme Court, right? Now, I'm summing up all my uh, uh, points related to departmental audit in few liners. Whether audit team can seize the goods, assets, or any other thing during the course of audit? No. There is no such power under Section 65 of the departmental audit. They cannot seize anything. Whether physical verification of stock and cash can be carried out? No. Can audit be carried out at the residence of a taxpayer? No. We have already discussed in Section 65, subsection 2. The audit can happen at the place of business of the taxpayer, of the registered person, or at the office of the audit commissionerate as per the choice of the audit authority. Right. Pre-intimation is given, unlike in inspection, search, and seizure under Section 67. We have already discussed. You will get a ADT-01 notice. Pre-intimation is given asking for the documents for the conclusion of the audit. Right. Confirm the period for which audit can be conducted. We have already discussed. Is it time barring? Is the notice justified? Right? Ensure that the notice for conducting the audit has been issued by the jurisdictional audit commissionerate. So it becomes very important. First of all, whenever you receive an audit notice, you have to check that the audit notice that has been issued is issued by the correct audit commissionerate. Right? Again, a very important and relevant point that is being faced by almost all the SSC, or I will say more than 25% of the SSC. There can be a situation that on the same point, the state authorities, if you are under the central jurisdiction, there can be a possibility that on the same point, the state authorities are doing any parallel audit proceedings, or on that particular point, you have already concluded that proceeding. It was in one of our case, we already know that for financial year 17-18, trans 1 verification was happening. So what was the department doing? That for the first year 17-18 and 18-19, I would say, for checking the trans credit, they have issued the trans 1 notices before the scrutiny or audit notices were issued. So departmental audit notices or scrutiny notices were issued way back, right? But trans 1 notices were issued very early in 17-18 or 18-19, right? So what happened? All the documents were submitted by the registered person to the range authority. Now, what was happening at the same time when department or audit notices were issued, they were asking for the same trans 1 documents, invoices to check the trans 1 credit. So in our case, we had that closure letter, that order copy of the state authority or the relevant authority regarding trans 1 verification. So what we did, we gave that notice, we gave that order copy to the audit authority officer, audit commissionerate, right? On the basis of section 6(2)(b, that part of that portion of departmental audit was closed right away, right? Because on the same proceedings that we have concluded Any other authority cannot, again, specifically the audit authority cannot ask for similar documents that has been already concluded or that has already been in process, right? We have already discussed show cause is to be educated by the jurisdictional authority and not by the audit authorities, right? I've already shown you how the notice look like and how the audit authority transfers that particular show cause to the jurisdictional authority, right? Also, there is no concept of uh, tax to be paid under protest under GST, which was similar in excise. But uh, if if there is a situation that you have to deposit the tax, there may be a situation that a point gets stuck due to gray area, due to interpretation, and to due to and to have peace of mind and avoid litigation. There can be a situation that the taxpayer or the registered person want to deposit may have to deposit the tax, but on the back of the mind, the taxpayer or the registered person has that feeling that he can fight at the on this point at the later stage. Then at the time of paying DRC 03 or paying the challan, making the DRC 03, on the remark side, they can very well incorporate what they want to say, that we are paying this tax under protest. A very relevant case is in that at the time of ocean freight. So Mohit Minerals judgment, due to which double taxation on ocean freight was removed. So at the time of departmental audit, the taxpayers have deposited ocean freight under RCM, right? But again, that proceedings were pending. So they have specifically at the time of DRC 03 have written that we are paying this tax under protest and waiting for the judgment to come so that they can get the benefit of the judgment and claim the refund of the tax they have already paid, right? Now, Manoj has already discussed about the relevance of invoicing. Now I'm connecting invoicing with the departmental audit. We all know that e-invoicing started way back 500 crores, then 100 crores, right? Then 50 crores, then 10 crores, and 5 crores in August 2023. No. Now you have to see what department is checking now. We all know that if suppose you are ABC Limited, right? Departmental audit is being initiated for ABC Limited, and they have taken the purchase from Manuj and Company, right? Manuj and Company has issued the invoice to ABC Limited, but Manuj and Company has an aggregate turnover 100 CR, but they have not issued e-invoice to ABC Limited. They have simply issued the invoice, paid the taxes, filed GSTR 1, filed GSTR 3B. Input tax credit is reflecting in 2A, everything is matched. But they have not issued the e-invoice. Now, what will happen? What department is doing? We all know there is a invoice portal. You can simply go to that portal, download on all India level on what GST and invoice is applicable. If we have already did this for our client, right? For better control, and again, that what I stated in my opening remarks, you have to be proactive, right? You have to be proactive. You have to think like what department is doing right now so that you can advise to your clients. right? So we downloaded that Excel, right? Then we compared that list with the ABC Limited creditors, right? When we would have matched Manoj Garg in our books, right? And Manoj Garg on e-invoicing portal, right? There would have been a mismatch. Now, what department can do? We all know that Manoj already stated way back. As per section 16, subsection 2, the primary condition for availing the credit, one of the primary condition out of the 5 condition is that you must have a valid tax invoice, right? If on that invoice, e-invoicing was mandatory, but invoicing was not done by your supplier, in our case, Manoj Garg and Company, the department can deny the credit of ABC Limited by stating that it is not a valid invoice as per Rule 48 sub Rule 4, right? So I think now you can imagine the gray area. I would say the red area, not the gray area. So right now, what you have to do for your clients, for a business unit, what you have to do? You have to take all your creditors, all your suppliers, compare it with the details that is available on the government portal, on whom e-invoicing is applicable, on whom e-invoicing is not applicable. Reconcile that data and observe on which invoices e-invoicing was mandatory, that has to be issued by the supplier, but they have not given you. You can ask them to give you the e-invoicing right now as per the situation, to avoid any litigation at the time of your audit. I hope I'm clear, right? Now, Manoj has touched, touched upon this topic, but again, I would like to add some clarification that was issued dated 26th June 2024, right? To so what is the issue that we say at the time of audit or at the time of scrutiny under section 61? So what is happening? Suppose ABC Limited has availed a service of a legal firm or a GTA on which GST was to be paid by ABC Limited on RC, right? But they have not discharged that RC. Now what is the what is the problem? Say for 17, 18, they have not paid the taxes under RCM. And at the time of departmental audit, they came to know that ABC Limited has not paid the taxes. Now the question comes, if ABC Limited deposits their tax today under RCM, whether they can avail the credit right now or it will get lapsed. So section 31 subsection 3 clause F says that for the RCM, for the RCM, the section is 9394. 94 is for unregistered to registered, which has been taken away in on October 2017. Just it is relevant for the builder sector. Major services are covered under 93, right? So 93 covers your GTA services, your advocate legal services, certain security services, sponsorship services, right? So it says that the registered person who is liable to pay tax under 9394 shall issue an invoice in respect of goods or services from the supplier who is not registered I have highlighted the word not registered. So what is important? Not registered. Now, as per Rule 36B, an invoice issued in accordance with provision of 31(3)(f, subject to payment of tax. So after the combined reading, what we get, that for any services that are covered under RCM, you will get the credit only when you will pay the tax. You will pay the tax using your cash ledger, only then you will get the credit, right? Now, section 16(4) says the time limit by when you can avail the credit. We go back to our case. For 17-18, we have to pay right now. Whether we get the credit, there was lot of clarification, I would say lot of chaos, and a clarification was needed. So as per circular number 211 dated 26th June 2024, a clarification was issued, right? So this is an important clarification, right? When you will see that clarification, it clearly says that in case of supplies received from unregistered supplier, I'm again focusing on unregistered supplier, where tax has to be paid by the recipient under RCM, and where the invoice is to be issued by the recipient ABC under section 31(3) subclause F. The relevant financial year for calculation of the time limit for availment under 16(4) will be the financial year in which the invoice has been issued by the recipient, subject to payment of tax, right? Now the question comes, sir, for unregistered supplier, suppose GTA was unregistered, we will pay the tax. No problem. Because we will not get the invoice. We have just paid him the amount and we will pay the tax right now. We will get the credit right now. So, but we'll discuss, there will be interest implication under section 50 if applicable. What about if there can be a situation that GTA may be registered? So first case, GTA is not registered. You will get the credit at the time of payment. For 17-18, you pay the tax right now, you avail the credit. Right? What if the GTA is not registered? If he is unregistered, you will not get the credit. If the supplier is registered, he must have issued you an invoice, right? So self-invoicing was not required. He must have filed the return. He must have tick on reverse charge supplies. It would have been reflected in your GSTR 2A 2B as the case may be. So if the supplier is registered and reverse charge is discharged after 3 or 4 years at the time of departmental audit, whatever the case may be, you have to pay you will discharge the RCM liability, but you will not get the credit as per this circular. Right? Okay. Now, connecting this circular with our case. So time of supply comes to picture. In time of supply is for calculating the date by which the tax should have been deposited, right? So what is the time of supply in case of RCM? Date of payment or 61st day from the date of issue of invoice. So if we check both the cases, this is the analysis. In the first case, GST was deposited within the time, right? But in the second case, the date of invoice was 10th September 2017. Payment was made to the vendor on 10th January 2018. Okay, GST was deposited on 20th February, right? But considering the time of supply, you have to connect this case with your departmental audit case, right? Due date of deposition was 20th December. The time of supply will be 9th November 2017. That is 61st day from the date of invoice. 10th September, say 61st day. 9th November 2017. So there is a delay. So again, going back to our case ABC Limited, if there is a delay, you will get the credit if he is unregistered, the legal firm is unregistered. But due to time of supply interest, you will have to pay as per section 50. I hope I am clear. Now again, a very important and a practical case study. I was deliberating at one of a forum of Federation of Education Publisher of India. Right now, we all know that books, majorly all books are exempt under GST, right? So all the publishers were there in the meeting, and all of them have their supplies, majorly all their supplies are of books. So that was exempt under GST. There can be situation of hospitals also which are dealing in exempt services. Now you have to see section 22, 23, 24. We have to read all these three sections, and you will have to get an interpretation of out of these three sections. So section 22 deals with the threshold registration. If your aggregate turnover or your supplies get is more than 20 lakhs, more than 40 lakhs, as the case may be, you will have to take the registration from where you are making the taxable supply. Correct? Section 23 says that the following person shall not be liable for registration who are dealing in exclusively wholly goods or supplies which are exempt from tax. In our case, books. So a publisher, imagine a publisher ABC who has his supplies books which are totally exempt. Now section 24, which deals with compulsory registration. Notwithstanding anything contained in subsection 1 of section 22, the following categories of persons shall be required to take the registration under this act. Right? So there are various points. I've just covered RCM. Take an example of a publisher. They have to make royalty payment to the authors. So that is covered under notification 13 oblique 2017. It is covered under section 9 subsection 3 under reverse charge. So what was the problem? What was the gray area? They are totally dealing in exempt. They are paying royalty to the authors. Now, if they are paying 100 rupees, they have to deposit tax under RCM, right? That will be their cost because they don't have any taxable supplies. So what is the question? After reading 22, 23, 24 combinedly, whether that publisher ABC Limited has to take registration under section 24 or not. This was the gray area, this was the ambiguity. So Finance Act 2023 clause 131 came up with amendment that was retrospective, which clearly stated and provided overriding effect of section 23 over section 24, right? So 23 get an overriding effect if you before this amendment, if you read this section also, notwithstanding anything contained in subsection 22 subsection 1. So 24 was ruling 22 subsection 1, not section 23. But again, there was litigation. But to avoid this litigation, from 1st July 2017, section 23 was provided overriding effect to the said section over the subsection 22 and 24. So now, if suppose a healthcare, if the person is totally dealing in exempt, say hospital, education publisher, or any other person who is dealing in exempt commodity or exempt items, right? Then even if he has taken any GTA services, any legal services, any import of services, anything, right? Even if under section 24 he is doing interstate supplies. Suppose that educational publisher is in Delhi and he is selling in Punjab, Haryana, Maharashtra, Guwahati, Tamil Nadu. All these transactions are interstate supplied covered under section 24. Even in that case, he is not liable for registration as per this clause, which is amended in Finance Act 2023. So section 23 has superseded section 24 and section 22. I hope I am clear. This is very relevant for SSCs or professionals who are dealing with the client that have exempt supplies. Correct? Now, again, important point, import of services. There can be, so import of services is defined in IGST Act, which has three conditions. The supplier of services must be located outside India. The recipient of services should be in India, and the place of supply, as defined in section 13 of the IGST Act, should be in India. Right. So while auditing, you have to see all the foreign transactions, all the foreign payments made by the registered person. There can be situation that he's making foreign payments, but not all foreign payments will cover under import of services. In our case, we can see, suppose if an foreign commission is paid to Mr. John in USA for procurement of goods or services. Supplier is John, recipient is ABC Limited. But for intermediary services, the place of supply of services where he is located, where is registered, that is USA. So place of supply is not in India but in USA. So RCM will not trigger, right? Second case, maybe suppose you get a hotel booked outside India, right? That is being booked by ABC Limited for a business trip, and foreign payment is made in dollars. In that case, also RCM will not be applicable. The place of supply where hotel is located, location of moved property, that is outside India, right? RCM will not be applicable. So these are all practical points that I have conferred from my experiences that is relevant at the time of audit by authorities or audit by professionals for their clients, right? Now again, a last point, then I will uh, conclude my presentation, right? So this is again an important point. So a new rule 88B was inserted in section 50, which said that if a return is filed belatedly, the interest would be payable only on the cash portion that we all know, right? In case IT is availed but not utilized, no interest applicability. But if it is utilized, for the utilized portion, you have to pay the tax. Now the third case, an important one. What if ABC Limited files the belated return, say for the month of April 25, they filed their return on June 25, right? They have enough ITC, okay? But they have missed out any payment of tax, or they have short payment of tax. For an example, instead of paying 12%, they have paid 5%. When they realized while filing their return that for the April month, when they were filing for June month, when they were filing their April GST or 3B in June, they found that they have missed this 7% of tax. They have enough ITC to pay that output tax, but interest would be leviable. So, second case, they have missed the tax liability. They have missed a transaction on which whole tax was payable. In that case also, they will have to pay interest, notwithstanding the fact that they have enough ITC to pay the tax. So what becomes important is the third case. If you are filing your belated return and you have missed any kind of short payment of tax or non-payment of tax, in that case, even if you have enough ITC, you would have to pay interest on the whole amount, right? Again, this is now settled in law, but if you have an exporter client of you're doing exports, an explanation to Rule 43 was issued by notification 14/2222 on 5th July 2022, which clearly stated that for the purpose of reversal under 17.2, 17.3 Rule 42 and 43, the value of exempt supplies shall not include the value of supply of duty scripts, SES, MEIS license, ROSL license. So these licenses which are sold by the exporters, okay? So even if for the calculation of Rule 42, 43, taxable and non-taxable exempted, there is no reversal. Again, so this was a prospective amendment, but for the period 1718 to 2022, there was litigation. So from as per my submission, it should be retrospective because it is clarificatory in nature. Again, there are few litigation in this, but you have to take your view, what you want to take a view in the proceedings, right? So that's it. I think we have to conclude now because we are running out of time. So again, thank you IDTC, GST and Indirect Tax Committee of ICI for giving me this opportunity. Thank you for your patient hearing, and
Thank you, sir.
thank you.
Thank you, sir, for sharing your valuable information and knowledge, empowering us, sir, empowering our knowledge on the topic. Thank you, both of you. If there is any question left, you may take the session. Question.
So someone has asked whether GST is applicable for services rendered to World Bank or IMF. So there is a notification 12/2017, entry number 10B, which has specifically exempted these services. So you can write it down, and these are exempt services, right? First question was input tax credit for Mediclaim policy, for personal accidental policy, workman compensation policy. As per my mind, 17.5B1, Mediclaim policy and personal accidental policies are not required as per law, mandatory as per law, so you will not get the credit. But for the compensation policies, if it is mandatory as per law, you will get the credit, right? So it is well settled in law, which if it is mandatory as per law, then you are eligible for the credit, else you are not.
Manoj sir, you can now also take the question. Manoj sir.
Yes.
Can you please share where the place was not mentioned in development? Someone is Mr. Yogi has asked, can you please share a view on where the place of audit is not mentioned in ADT01? It is difficult to determine the period of audit. Which will such not mention the place of audit? Sir, when you will receive the ADT01 notice, so ADT01 notice will only mention what documents will be required, and they will communicate you if they will be conducting the audit at your place or at the audit commissionerate office, and period would have been specifically mentioned on that ADT01 notice, right? So they cannot just give you a notice without mentioning the period, right?
And more or less on practical scenarios, it has been seen that the first notice, it has been never been specifically mentioned whether the audit has been conducted
Correct.
at the place or whether it will be, whether the assessee will be called
Correct. So it
by the
depends on the volume of the data that you will provide, and on the basis of that, he will decide what he wants to do.
So just to add up, Aditya, I guess there is one query that I missed out earlier that asked for self-invoicing concept. Dipanshu ji asked for self-invoicing concept. So Dipanshu ji, the self-invoicing in itself means raising an invoice on itself. So if a person, recipient per se, who is liable to pay the tax against the services or goods which are either prescribed under 9(3) or where such services are being taken from an unregistered person as per 9(4), then that person has to pay the tax under reverse charge. Post payment, there is a document as per 31(3)(f), which states that such person who is paying the tax, who is liable to pay the tax under reverse charge, shall issue a self invoice on itself. So that document per se is called a self invoice. This is no different from a normal invoice, but yes, the only difference here is that a document has to be issued by the recipient on himself. That's against the tax paid under RCM. I hope I am able to clarify that question.
Yes.
So there is one question that if ADT01 is not uploaded under the GST portal additional notices, but issued physical, then what needs to be done? So if you see the service of notice section under section 169, it is clearly defined. They can upload it on the portal, they can send you physically, right? So if they physically issued you the notice and they have they have properly quoted the DIN number and the verified reference number, then it is self-sufficient and it is a valid document. Right, Darshan? I hope I'm clear. Now there is a question from Harish. If we give wrong GST rate instead of 20 and instead of 10, how will we rectify it in the e-invoice? If the rate is incorrect, you can, so there is no option in the e-invoice portal to edit that e-invoice. You would have to cancel it and issue a new invoice, right? So there is no concept of editing in the e-invoice. You can correct if the time has lapsed, you can correct it in your GSTR1. There is no other option. So list of RCM to be paid compulsory under GST, it is already defined in 9394 notification 13/2017. You can refer it. Vineet ji, do I have to take registration if I am dealing in exempt goods? Sir, as per section 23, if you are totally dealing in exempt goods, totally exempt, then you there is then you can opt out not to take GST registration. We have already discussed this in detail. Mm, I think we have covered almost all the queries now.
Yes, sir.
Most of them are now repetitive and asking for the PPT. So I think that's it.
Thank you, sir. Thank you for sharing your impeccable knowledge and hand-on experience on the topic in such a
Thank
short
you.
notice that deliberation adds a value to us. Thank you.
Thank you. Thank you, Manoj. Thank you, ma'am.
Thank you.
Thank you, both the
very much.
faculties. Bhargav, we can sign up for the day. Bhargav, we can sign up for the day.